Hello, everybody. This is Joshua Hayes at Big Wave Trading for your January 28th stock market wrap up for you to use tomorrow, Friday, or this weekend, whenever. Some good news today, but however, I got some bad news also to give with today's gains. As you can see, the New York Stock Exchange was up 3.5% and managed to take out the 50-day moving average, the white line on my charts. I want to look at the NASDAQ next to show you. The NASDAQ was up 3.55%, opening above the 50-day moving average and taking out the 50-day moving average. The Dow Jones Industrial Average, this was up 2.46%, however, still below the 50-day moving average. And if you look down here, you will see the relative strength line has hit a new low since the previous January low. As you can see, while the price is not hitting a new 2009 low, the relative strength line is. And then let's take a look at the S&P 600 to show you it was up 3.8% today, and it took out the 50-day moving average. Now, I want to show you leading stocks of the best in the market with technicals and fundamentals via the IBD 100. The IBD 100, if you look up in the upper left, was only up 1.5% today, lagging the market by 2%. Now, what does this mean? Easy. In 2003, when the indexes were making their 4 and 5% moves, the IBD 100 was making 5 and 7% moves. And while the market was doing it on large volume, the IBD 100 was doing it on even larger volume. So the leading stocks were moving farther, faster, and stronger via volume than the overall market. But as you can see right here, since the recent lows around 160.37, the relative strength line is rolling over while the price moves up. This should not be happening. The price should be moving up and the relative strength line should be moving up and more of a higher slope. It should be more of like a 60-degree angle instead of a 45-degree angle, just to show you that it's outpacing the market. But the fact that the IBD 100 is still below the 50-day moving average, like the Dow Jones Industrial Average, and had today's move on slightly higher volume but below average, and it lost pace with the NASDAQ by 2%, that kind of tells me that today's move wasn't that bullish. And as you can see, even the last time it tried to rally off the 154.62 in November, where did the relative strength line go while the price went up to 183? You can see it went down. So the IBD 100 has been showing negative relative strength to the market. And I hate to tell you this, all you people that want to believe that we have a bottom, we could easily rally to this black line, the 200-day moving average. Let's go ahead and get off these stocks and go back to the market. And we can easily get to the 200 on the S&P 600 and NASDAQ possibly. Those index lines are going to come down more, so it'd be around, like for the NASDAQ, it would be around 2,000, and it would probably be around 1,900 before it stops. I can see a rally lasting that long. However, look at even today's volume on the NASDAQ, up 3.55%. Volume is below the volume even on January 15th, and lower than the volume in November, October, or September. So if we were going to believe in any follow-through day, we should have believed in September's more than this one. And October's follow-through day, we should have believed in more than September. And November's follow-through day, we shouldn't have trusted as much as September. And even though it barely worked, this follow-through day is even worse. So instead of getting better and of higher quality, it's getting worse. So there's the NYSE, there's the NASDAQ, and the Dow Jones Industrial Average. And the sad thing is, even though volume's above average, look at volume overall to September, October, November. It's nowhere near. Nowhere near. And even on the IBD 100, look at the volume now compared to the volume in November and October. If we were going to see a real follow-through day today that was going to lead to a new bull market, volume here would be bigger than in November and October. And not only that, we would have beautiful charts everywhere. However, let's take a look at like my best winner right now. It's up 48% for me. This is what it looked like in the beginning of September. I mean, look at this chart. This is a perfect chart. This is what all my longs in a bull market, if you study my past big winners that are available for free at my .com site, and I really recommend you do that to see how we can make huge money in time frames of around 6, 9, 12 months, and even sometimes 3 to 5 months only. And I'm talking 200 to 500 to 1,000 to as much as 2,400%. Study my longs, and when you see charts like this, you know to go big. I bought this breakout in June. Since then to that top in September, you had a 94%. This was the load up moment right here. This breakout right here on volume bigger than July, bigger than June, bigger than May. And then green bop goes green bop back in May, stays green all the way except for a couple of days, grows towards max green, and then on the breakout hits max green. So today would be a day to load up, but until these kind of charts show up again, there's no way I'm going long stocks. So we can see what it did right after that the very next day, up 22% the very next day. And that's how all my longs are supposed to act. But look at it now, right now, in this market environment that we're in. And you'll see that the market, while it's still holding up from that perfect buy, the gain is now from the perfect buy only 12%, which just goes to show you the market's not acting right. Stocks would not look like they look now here. They would look like they looked back in August if this bull had a really far way to go. What's even worse is people are telling me to buy Goldman Sachs. Does that look anything like that ANCI chart I just showed you? People are telling me to buy C, to buy Bank of America. Does that look like anything like ANCI did whenever I loaded up here and from there to the top where we did take some profits right around here? There we go, right around there because the low volume highs. So just from here in 1.5 months, almost 50% gain in 1.5 months. And from the first buy, let's use this reference point since it's closer to where I got filled, 98% in 1, 2, 3 and a couple of weeks. 3 months and a couple of weeks. And that's in a horrible market. That's in a horrible market that sells off like this while we find that. And right now, the September lows looked better than now. So bottom line, all I can tell you folks is after going through my longs tonight, I don't have any new longs. I don't have any new shorts. And if this was a real bull, the IBD 100 right down here would have relative strength moving up from the November lows and moving up from the January lows. And the price would be over the 50-day moving average. And instead of the NASDAQ being up 3.5% and the IBD 100 being up 1.5%, the IBD 100 would have been up 3.5%, and the NASDAQ would have been up 1.5%. If that's how the follow-through day today would have worked, I would have been like, let's get long. However, I have 8 longs. I hope those 8 longs can make me money as they're all still in an uptrend. But even one of them, I have to sell 20 to 25% today to be disciplined. It's still a leading stock in a leading industry moving up, but it still went lower today and actually gave me a partial sell signal. That doesn't happen on follow-throughs. I shouldn't have any sells today, and I should have more and more longs to buy. Instead, I don't have any longs to buy. I have a lot of longs on my watch list, and I would love to ramble them out, but everybody that's a subscriber already knows what they are. It's just the free guys just don't know what they are, and that's fine with me. Now let's end this off by looking at oil. Oil's around that 42. I feel it's going to be in between 40, 45, 35 to 50 for a while. Let's look at platinum. How did it act today? Holding in there. Had a bearish intraday session a little bit, but still it was semi-bullish because it opens at 941, closed at 953. Let's look at silver. Silver, it's got a bullish tail, held in there. Let's look at gold. Gold got a bullish tail, sold off a little bit today, 1.2%. Might make some nervous. Doesn't make me nervous because my gold outlook started in 2002. I told Mike I'm not going to say his last name, at Kula Gold in Lahaina, if you want to ask him, if you ever come to Lahaina, that he should go long and build up his inventory in 2002. Since then to the top, gold's up 212% plus your margin, and I still feel like gold is a long-term buy and that everybody should have some of it in your IRA. I don't care if you get it at 900, 700, 1,000. I think if you have a 25-year span, you should have at least some of it in your retirement account just in case. The last thing I'm going to look at is the dollar. Dollar holding into the 50-day moving average, a bullish tail just like gold. Can't complain. The only thing I can complain about, the follow-through day on today's stock market. Volume is barely above average, and the price gain is stronger than the IBD 100. It should be the other way around. I'm going to go and wrap it up here. Aloha.